Aspen's been a great partner of mine in my former job at Rockefeller, and I think for many of the people in this room, impact investing over the last few years has become as much about community as it has been about product development or analytics, and certainly Aspen has been a major part of that community, and it's great to see so many of you here who are old friends and familiar. It's fun to be down in DC to do this, so obviously it's great for us to have Aspen provide this great venue, so I just wanted to start by thanking them. The other thing, I just wanted to, we do want to talk a little bit about the book. Again, I hope some of you have read it. We have copies for sale. If we run out, they're available on Amazon. But rather than give a sort of overview of the book, I think what we really want to talk about is just really three things. One is, what is impact investing and why we describe it in the book as a both disruptive force and also a force with great potential. And then, what are some of the examples of how it's already happening? And then I think what's most interesting, and we really concentrate the second part of the book on, and that is the question of, so what is it going to take for us to realize the potential of impact investing? And the book is not a triumphalistic assertion that this idea has come and is going to save the world. It's rather a challenge to say this idea is a powerful one, but it is a powerful idea that is being planted in a somewhat hostile set of systems. And so what we want to talk about today is, what is it going to take for everyone in this room and elsewhere to help build the new systems that can really create the more fertile soil for that seed to germinate. So that's just giving you a bit of a preview of what we want to get into, but I think it is more fun if we can also have more time for conversation, so we'll try and go through this relatively quickly. That's why we've kicked out the PowerPoint. But I just wanted to begin by saying, how many people here sort of think they could answer the question, what is impact investing? Okay. So timid, but probably half the hands. And how many of you think you are participants in the impact investing industry? Okay, and then of the people whose hands are up, how many of you, when you go to Thanksgiving dinner, face family members who don't understand what you do, and when they try and understand what you do, think you're pretty crazy? So I think that's about right.
So we did this for our moms, basically, so they could understand what it is their sons are actually doing.
Exactly. At least two people have read the book. And I think that's partly why there is a community. I mean, part of the community that is formed is the fact that whether it's someone, my friends at JP Morgan, who I actually have more in common with than sometimes I do with my own colleagues, partly, certainly when I was at Rockefeller, partly because the thing many of us have in common is that most people think we're crazy. So that's sort of impact investing, and then we just want to unpack why that is and how we think that's going to change. So for those of you who didn't have your hand up about what is impact investing is either an incredibly simple and banal concept or an incredibly radical concept. And at its core, as we describe in the book, it is the very simple idea that an investment that is seeking financial returns can also be a morally legitimate and economically effective way to address social problems. So out there, most people would think that's kind of crazy. Maybe some people in this room think, well, that's so obvious. And we did a talk earlier today at OPIC, whose new CEO, Elizabeth Littlefield, has been a great visionary supporter of this work in her previous job on microfinance and now more broadly. And when you say that at OPIC, well, that's an organization that for 40 years has been constituted around the idea that U.S. public interest could be projected through for-profit investment. But for most people, that doesn't make sense, and it doesn't resonate with the world they live in. And so, what we describe in the book is that the world we all live in has been organized in what we call the bifurcated world. And the bifurcated world is very simple. It's a world in which there's two basic pillars. On one hand, it's the assumption that as a private citizen, if you want to make a social difference, you should be donating your money to charity. And as a government, if you're trying to achieve social good, you should be doing it through subsidies and either building the public sector or building the nonprofit sector. So one pillar is the only way to solve social problems is through subsidy and charity. And the other pillar is the assumption that the only purpose of business and the only purpose of investing is to make money. And if those two pillars are true, then the world we live in, which is the bifurcated world, supports us. And so there are many ways in which, if you believe those two things, you can run an effective business trying to make money, and the policies and the regulations will support you. If you're a philanthropist and you're setting out to run a foundation, you park your money in a nice investment fund, you try and generate as much financial return as possible, you throw over a little bit every year and you give it away in order to prove your social purpose. And there's conferences you go to, and there's lots of literature, and there's lots of peers who are doing the same thing. And so the bifurcated world exists in our policies, it exists in our philanthropic systems. Many systems have been created to support it. And that was sort of fine, except for two things. One is it's not fine, because it's not working. And increasingly people out there are starting to wake up to the fact that that way of running our world is simply failing to keep up with the challenges we face. And whether that's climate change, whose capital needs exceed, transitioning to a new economy is going to, new energy economy is going to take more money than we have in government philanthropy. Or it's the fact that businesses that simply pursue financial purpose are no longer motivating their employees. In many ways, there's sort of been this murmuring that that sort of old worldview isn't quite working. And so on one hand, there's a sense it's not working, and then on the other hand are a group of people who are saying, well, we've got some other way of doing things. And so whether it's the microfinance industry, and Gil Crawford from Microvest is here, pioneering impact investors who said we can use for-profit investments and put those in the hands of good microfinance institutions who can make money for our investors and also help alleviate poverty for some of their clients. So microfinance has been doing this for a while. In the US, and I saw on the list someone is here from HUD. This is not just an international story, it's also a domestic US story. The community development housing finance has for decades in the US been built around the idea that public money can be used to bring in private money, and that banks can be making investments whose purpose is not only to make money but also to build low-income housing. And so whether it's microfinance, low-income housing, affordable school lending in India, we have a lot of examples in the book of ways in which people are starting to manifest a different aspiration. And that is an aspiration of an integrated view that says it's not about either solving social problems through charity or just making money with our businesses and investments, but we can do both together. And so into this world of bifurcated systems has come a newer reality and a new set of examples that every week get more and more compelling, anecdotes around the world that there's a new way of doing things. The challenge and the moment that we face and what we describe in the book is that another decade of compelling anecdotes is not good enough. We really need to start to move from anecdotes to really building the transformational systems that can actually start addressing challenges at scale. And to do that is going to require changing those systems that are the legacy systems of the bifurcated world.
Man, I could just listen to you all night. Just like,
I need
incredible.
time to
No, I mean, I think the other thing that's happening as well, and we'll talk about what needs to change in order to get this to go forward, but I also feel that what we're seeing is really sets of actors who've come to the limits of the approaches that we've brought to bear to date. We're seeing folks from traditional nonprofit space saying that basically they're not seeing the impact, they're not seeing the change, and it's really the change that people want to be about in their lives. And we're seeing folks from traditional business who almost, I mean, it's interesting, when I go talk with some of these people, they almost resent the idea that for-profit businesses don't create social or value or have manageable environmental impacts. And they want to get credit for the value that they feel they're creating through the course of doing a for-profit work. And what's interesting is I think that increasingly folks are coming to this place where more and more of us are really agnostic in terms of vehicle and investment instrument. We really don't care, quite frankly, if it's a nonprofit or for-profit or an L3C or a B Corp or da-da-da-da. I mean, it just doesn't matter. And we don't really care if the toolkit that you're using to finance and fuel your enterprise is driven by philanthropy, recoverable grants, PRIs, MRI, impact in terms of direct equity and debt vehicles, because all of this are just means to an end. And what's been striking to me over the past 10 years in particular is the number of conversations I have with people who are saying, I want my life to be about maximizing the value of my having lived. I want the organizations that I touch and I create and I help contribute to really be about maximizing their total performance. And what's happening is I think people are really fundamentally rejecting the bifurcation and are coming together in the muddy middle, if you will, and creating better, more effective, and sustainable answers to how to execute on strategies that they're creating that really don't fit in the either-or kind of space. And part of that, I think, the energy that's come behind the term impact investing is that to date, people where you stand depends on where you sit. And people have tended to view the conversation from where they enter. So I'm a social worker doing community intervention, or I'm a community development finance person, or I'm a community banking person, or, and just, go right down the litany. And increasingly, folks are saying that under the banner of impact investing, they can place themselves in a larger community that transcends the silos and the parts and helps them focus on the whole. And one of the things that we talk about in the book is that in addition to the anecdotes that have really been kind of the driver for a lot of this to date, we're really seeing a shift away from the deification of the individual and away from the idea that it's the visionary social entrepreneur who's going to carry the day. Because in truth, that's never really been the case. Right? It has not been the social entrepreneur that has this great idea and goes out and beats everybody else into conformity around that vision. It's been the team that he or she has assembled. It's been the organization that they've created. It's been the capacity to execute across boundaries with various tools and instruments across cultures that has really begun to kind of unleash the real power of this. And if we're going to continue to kind of grow and evolve, we have to cultivate leadership that acknowledges a variety of roles of leadership. And we have to understand that the field is not going to be built by a bunch of individuals. It's going to be built as what we call leadership of the whole. And when you go out and you go to business schools, or you just go out to universities and you talk with folks in their late teens to mid-20s, it's a striking conversation to have, because these folks come to the conversation without even an awareness of the bifurcation. And to them, of course, I want to pursue profit with purpose. Whereas 30 years ago when I got my MSW, if you wanted to change the world, you went and got your social work degree and did community organizing and advocacy. Right? If you wanted to make money, you went and got your MBA and you became a mercenary capitalist. And more and more, young people are going to get their MBAs to engage in community work, if you will, and are conceiving of the value of a business enterprise as not simply being economic, but as really having baked into its DNA social and environmental aspects of performance and value creation that they want to organize their teams around, and they want capital that gets that. And increasingly, it's not a question of how much money can you raise. And at this point in time, it's really a question of, can you raise smart money? Because the last thing you want are people coming into these deals and misunderstanding what it is that you're actually trying to build. And a lot of this conversation today now, we've got, I think, real attention and momentum on the, quote, capital side. And we've got more and more businesses and social entrepreneurs and other entrepreneurs creating enterprises. But there's still this question of, how do you connect the right parts and get the right money to lock into the right opportunities? Because there's a whole host of risk return and total performance profiles that people are trying to capture, both from the investing side and from the enterprise creation side.
Yeah, and just to pick up on that, I think an important point, the book is called Impact Investing. The phrase was coined 4 years ago, but impact investing is not a 4-year-old phenomenon. And when we mentioned microfinance and other aspects in which people have been pioneering this, and I think to Jed's point, what's new is the language is new, but the language allows those different streams to come together in a way that we think is starting to create power. It also eases the formation of community. We go to conferences now and people have on their business cards impact investor. And that might sound a little crazy, but it means I immediately have an affinity with the other person in the conference who has that on their business cards. And so I think language is powerful. And I don't know, as an outsider, I don't have an MBA. I teach at a business school, but I fake it and I wear a suit and cut my hair. But I come from a policy school background, but as an outsider to the capital markets, I guess I was naive and thought that the capital markets were moved by rationality, and that analysis and reason is what determined how money flowed. It's not. It's community, it's socialization, it's ideology, and all those things require community and ideology and socialization to counter. And I think that's partly what's happening with impact investing, is it's given the rhetorical umbrella under which more people can huddle together so that the low-income housing developer and the microfinance investor can say, yes, I'm part of something that is together. Jed is sort of giving a bit of the good news story about the power and the energy, and it's no doubt it's true. One of my former students is here. There's probably others who've been pioneering this in the business schools.
Been touched by your words.
Exactly. But the one thing I'd say, and I had some students from an unnamed business school in my office, and they were on a trip to New York to look at impact investing, and they went to the Acumen Fund, and they went to the Source Economic Development Fund. Source runs a $200 million impact investing fund now. They came to see me, and at the end of it, I did something I'll never do again. I said, how many of you, when you graduate in May, they were all second years, want to be in impact investing? And of the 20, 16 raised their hands. And I said, and how many of you think you will be in impact investing? And 12 lowered their hands. I said, that's about right, and it's depressing. And I think what it, and the reason that's why I won't do it again, but what it really points to is a new set of aspirations are confronting an old set of systems. So you suddenly have, and it's not just with young people, it's also the high net worth families that Jed advises who say, we want to move hundreds of millions of dollars into this, but the systems that are in place, whether it's the capital market systems that tell you, here's how you give your money away, but here's how you invest it, and don't know how to merge the two. It's the legal system that says, we have an example of a Canadian investor who made a lot of money, decided he wanted to do social good. In his case, he thought, the thing I really care about as a Canadian is the unemployable and unemployed populations within Toronto. So he said, my thing I care passionately about, and he's very analytical, is those groups of young people who just can't get jobs for structural reasons. And he said, so how should I help them? He didn't go to school, he didn't study this stuff, he just was a businessman. And he said, well, the best way to help people who are unemployable to get jobs is to create businesses that employ them. And for him, again, to Jed's point, this wasn't something he didn't have to be trained, this was intuitive to him. Well, he set up his foundation that way, and then he got a rude letter from the tax authorities rejecting his application to use his philanthropic assets to invest in businesses that were going to be employing these kids. And as someone who just intuitively understood what an integrated world would be, to be confronted by the bifurcated world was a huge shock. So we're seeing that over and over again, where there's a new set of ambitions, but meeting an old world. And I think, in the book we talk about 5 basic systems that are going to have to change if we're really going to capture the power of this energy. Because if we don't change the systems, all of that energy, whether it's the young people or the investors, yes, a few of them are going to just be stubborn enough that they're going to bash their heads against the old systems until they figure out how to make it work. And a few of you are in the room who've been doing that for a decade or more. But most people are going to fall out, and most people are going to be like those 12 people from the business school who said, yes, this is what I want to do, but I'm either just going to go to a nonprofit or I'm just going to go to consulting or banking. We had to identify 5 basic systems that have to change. The first system is the system of policy and regulation. In most countries around the world, basic policy and regulation says the purpose of regulatory frameworks for investing is to make sure that investors don't get swindled. That's all the fiduciary duty, or lose their money recklessly. And the purpose of the philanthropic regulation is to make sure that the tax break we give to charitable donations actually serve a charitable purpose, which in most cases is defined as giving your money away to nonprofits. Suddenly an impact investor shows up, like the great nonprofit Root Capital in Boston, they're in the book, who say, we actually want to raise debt financing in order to lend to poor farmers because we think that's the best way we can help them uplift their communities. Our policy and regulations don't know how to deal with that. Should you get a tax break for investing in Root Capital? You get a tax break for donating to them. Lots of examples like that. So the first system is policy and regulation. It has to change. Jed's already talked about leadership. We have a whole set of leadership that does 2 things. On one hand, it tracks people into the bifurcated world. Go to policy school, go to social work school if you want to do good. You want to get an MBA, go make money. And it deifies the individual, both of which are quite antithetical to really developing the new systems we need. The third set of systems we need are the systems of how we measure value. And if I'm going too fast, buy the book. It's all in there.
We're at the time, so we're trying to slam through some of this stuff.
So system 1 was regulation, leadership, not in any particular order. Measuring value. If you're an investor and I say to you, I've got an investment option for you, you can invest in a hotel, and you have a hospital. 2 hospitals you can invest in. And one's going to give you a 12% IRR, and one's going to give you a 14% IRR. You know what that means. And the investors in this room, it's almost intuitive for you to be able to understand what that means. You don't even need to know what you've probably forgotten how it gets calculated, because it's just such a common way to compare value. But when we get to talk about the social impact of those hospitals, especially when those hospitals are businesses, on one hand, we're developing better ways to measure value of social, charitable, nonprofit work. We've got good ways to measure value when it works of business. We don't really understand how to measure value. If you can't measure value, then you can't really place your marginal dollar with the most effective problem solver. And you also can't compare in a low-cost way the different deals. So a huge inhibitor that keeps common people out of this field is the basic ways that we can be comparing and contrasting value. very quickly, there are two other major systems that need to change. And I talked a little about earlier, the system of philanthropy. I am on day 3 of my new job. I no longer work at a foundation, so I can say this in a way I probably could not have said 2 months ago.
But you have to raise money from them,
I do.
So it's worse.
But I will still say that I'm convinced that 100 years from now, people are going to look back at the way most of the philanthropic sector operates, in which it puts all of its money into for-profit investments with no concern for social impact, throws up enough free cash so that every year in the U.S. we can put 5% to grant money. I'm convinced people are going to look back at that in the way that you and I, if we think about it, look at the factory owners of the tannery factories in London in Dickens' time. I didn't get to say that when I worked at Foundation. What do we think about them? We think about them that they were wasteful, that they were short-sighted, that they were running their businesses in a way that was not sustainable. I'm convinced we're going to think that way about the way we organize philanthropy right now, but it's going to take time. And one thing I hope we did in the book is it's easy to be judgmental and say, philanthropists are wasting all this money and how it's immoral, and probably by comparing them to Dickensian tannery factory owners, I've done that. But what we do say in the book is, again, it's not about resenting anyone or about judging anyone. It's about acknowledging that a set of systems has been built over 100 years that has organized that money and the people who run those organizations, whether it's the board members or the management teams, to think of maximizing value in a bifurcated world. And if the bifurcated world's 2 pillars hold, if the only purpose of investing is to make money and the only way to solve social problems is to give money away, it absolutely makes sense to run a foundation where you have one team that maximizes financial return, throws a little bit over, and gives the money away. It's not that these people are stupid or evil. They absolutely are struggling, and the best foundation managers and board members are struggling nobly to do something very difficult, which is to run that model well. Impact investing just creates a whole new challenge, which says now it's not good enough just to give your money away really effectively and invest it to make sure you keep your money. Now you've got to think about all of your money and what the opportunity costs are of those investments on the social side. And so it just creates a complicated new way of having to manage that we don't have the language for, we don't have the policies and regulations for. So we really need the systems. The last thing I'll say is that we need our systems of capital markets, or in the book we call it how do we move the money. Right now, most of you know how to give your money away, and most of you probably have bank accounts, and so you know how to save your money. The fortunate people in this room who have enough money to be investors might know how to call up a broker. We basically know how to deploy our money into the charitable part of the bifurcated world or the capital markets sort of for-profit side. But how do you move your money into impact investments? And again, I know Calvert Foundation was going to be here. Hey, Calvert Foundation for 13 years has been pioneering in the U.S. a product that would allow the common investor to be able to, without having to have hundreds of thousands of dollars, get into impact investing. It's a huge struggle. Other people in this room have been working in various ways of how do you create the products and the platforms that are going to allow people to as seamlessly move their money into impact investments as we currently can into the other sides of the bifurcated world. Until we get all those systems sorted out, we're going to be talking about this energy, we're also going to be talking about the frustrations, and we're going to be losing a lot of this momentum as people who don't have the craziness and the stubbornness to bash their heads against those systems to force something to happen are going to be able to make that happen.
Yeah, it's you said it becomes very complicated, and I would go back to what you started us with, which is that it's actually very simple. And Einstein, not to overreach, but Einstein once said when he was being asked about the theory of relativity, he said it's actually very, very simple, but that doesn't mean it's easy, right? And I think that for a lot of folks, there's this point where the scales just kind of drop off and you have this clarity about what this is, and that it's not about kind of doing philanthropy, it's not about making money, it's simply about maximizing the value of you having lived and maximizing the opportunity that communities and people that you care about have. It's very easy. And where the passion and in some ways the outrage comes is when you look at this bifurcated space and you realize that so much of this we've created is this shell game to justify these processes that actually are not creating value. And people get offended when I do the shtick on the foundation asset issue, but I'm actually kind of outraged because I feel like I still identify as a social worker, and I feel like this money is money that was given supposedly to advance the public good. And we as taxpayers pay for that by giving people who create foundations a tax consideration in the process of doing that. And the idea that we have bought into a business model that literally says for every dollar that you put into this strategy, a nickel, and it's actually less than a nickel because you're allowed to charge your administrative costs against that payout. So let's say 3% goes to driving 100% of your institutional mission, and 95% of your assets goes to simply try to make more money. I'm sorry, I think that's wrong. And I think that in this day and age, when we look at the host of challenges that we have both domestically and internationally, we need all the assets, we need all the tools, we need all the best thinking to help us create better vehicles and structures in order to really create the value we seek and have the impact that our communities deserve. And folks who are against that, great, I get it, and get out of my way. Because
he gets one F-bomb.
I already did the F-bomb earlier today, so I can't say it again. But I really feel like it's an advocacy issue around assets, because these are assets that people have, quote, given up. And when you look at the foundation space and the $600 to $700 billion that is inert relative to mission, I think those are dollars that should and can be structured to do this. And part of, I think, this coming together across silos shows us is that actually we can draw on 20, 30, 40 years of experience of how to do this well. And the idea that somehow this is new and too provocative and well, let's see, I'm kind of like, by the time you wait and do this, by the time we're done with this conversation, another 30 kids will have died from preventable disease, right? That's okay somehow? I don't think so, right? By the time we're done with this conversation, the opportunity to finance new enterprises that can sustain themselves after the grant dollars are withdrawn, gosh, that opportunity is right there. You can taste it, you can see it. And there's an urgency that I think is absent in a situation where your performance is measured on the size of your asset base. So every year, I go into hysterics when I look at the Chronicle of Philanthropy's list of top foundations, because they're not ranked on the basis of impact or innovation. They're ranked on the basis of how much money they still have. And something is wrong with that equation of success. So in any event, I think just to back off a little bit before...
and I'm the one.
So I think that what's happening here is a lot of this actually has been driven by individuals, by families, who basically are at a certain point in the lifetime of the family where they're saying, what's this really about? And is it really about managing our wealth so we as a family can have more wealth? And more people are in essence coming to the discussion and saying that actually that's not it. And wealth preservation may be part of our consideration, but wealth growth is not. And in fact, they will come into deals and structures that won't give them the same kind of financial return that you might require for the size of risk that they may be assuming as an investor. But that's okay if you can document and demonstrate the impact that they're basically leveraging by virtue of taking that position in a deal. And this is where the issue of measurement becomes really important, because I think that too often folks, myself included, in the nonprofit sector wrap ourselves in this cloak of righteousness and want people to believe that we're creating impact because we have such good intent. And I think that the day is past when, in fact, we can continue to confuse intent with impact. And we need to have higher level of accountability and transparency. We need metrics that can actually drive performance and that we can hold all of ourselves more accountable to. And it's not that the metrics are the answer and are going to, gosh, once we get the metrics right, that will then unleash this, that, or the other. It's that the metrics allow you to engage in a discussion about purpose, intent, and performance. It opens up a way to have a discussion around whether or not the assets that we're moving into these various vehicles are performing at the levels that we seek and that we intend. And it's a way to basically connect the investor community and the asset owners with the entrepreneurs who are creating these innovations and are playing in a space that to date has been this muddy middle. It helps clarify some of that muddiness. And even if we accept the fact there are limits to metrics and their value, we need to have some basis to be able to look at different things and understand them in relative terms. And I think that's part of the opportunity that we have. Now, we're already at 5:20, so we've already blown through our commitment to only speaking for 20 minutes. So,
I always get the last word. So, just quick, just to pick up, when you think you found the new truth and you're railing against the existing systems, you often feel like the guy in Plato's cave, and you don't want to be that guy. So it is easy to sort of get self-righteous. One of the best things I've heard along this journey is, don't hate the player, hate the system. And so, I think that helps me depersonalize this. A lot of people in this room have been bashing their heads against this. I'm seeing some head nods. And it can get personal. But again, it's not that people, incredibly well-intentioned, smart people who are maximizing within a system are doing things that might seem crazy to us. But the other point, we haven't really sort of spoken. It's interesting how many impact investing conversations don't reference the context of the world we live in. 2008 happened, and a major recession is happening right now. In this country, there's unemployment, there's horrifying levels of hunger. We are in, there's a context in which we're having this conversation. And, if I can spend 2 minutes and sort of play this out, when you sort of take all these pieces together, the fundamental question we need to be asking is, how are we as societies going to be mobilizing and placing the capital we need to create the decent and just society we want to live in? Again, it's either a really profound question or it's a completely banal question. But if you sort of take all this talk, and it's this conversation, it's the conversation about social entrepreneurship, and it's the conversation about mobilizing enterprises and the State Department and the work that Rob and others are doing, that's really the question we're asking at the highest level. And I think impact investing is part of that answer. But it will be a limited part of the answer if it's only about how do we raise money from ultra high net worth individuals to place into the most charismatic, early stage social enterprises. That's an important part. We're not going to have an answer to that question. How are we going to mobilize and place the money we need to create a decent and just society unless we get some incredibly charismatic social entrepreneurs to grow their businesses? But we're also not going to be able to answer that question unless we think about what does this movement have to say about how are we going to sustainably deliver social services? And just in the U.S., how are we going to have domestic violence clinics capitalized? They're all suffering under budget cuts. How are we going to get our homeless shelters, our soup kitchens, the less sexy aspects of what it takes to create a decent, just society? Impact investing has the potential to be part of that answer if we understand that that's the question we're posing. So I think, again, it's great to talk to this group because I think all of you are touching this in different ways, and we all spend so much of our time in a small window in the world. Ultimately, that's what this is about. Impact investing is not just about doing the deals, it's about changing the systems, but changing the systems of impact investing is about the even broader question of what ultimately are we trying to do and what is the way we're going to create the society we want. And it's not going to be the old models because everyone's deleveraging over the next 20 years, and whether that's governments or private investors. And so I think that's why this is particularly timely, because of the urgency of the issues and also the potential. But the big takeaway from our book is huge potential that will not be realized unless we collectively raise our sights and understand what it's going to take to pull it off.
So, on that note, why don't we just open it for comments and questions and observations that folks may have in the back there? And if you could stand up, project from the diaphragm, and say who you are, it would be
Absolutely.
great. Oh, we have a mic. This is such a classy place. It's incredible.
Are we live? Great. My name is Mark Peterson. I'm from USAID. And one way to increase impact investing is to start by building new organizations from the ground up that are built around this idea. But that leaves out a tremendous resource, which is the large private sector organizations that are just huge. And so I was wondering if you could talk a little bit about how to bring them into the mix and how to create incentives for them to move towards impact investing and what sort of challenges you might see there.
Maybe we'll take like 3 and then we'll try and add them together to be efficient.
Or not.
Jed, what are your thoughts on multinational corporations?
I think that you're talking about transnational aid organizations, things like that.
Well, in private sector companies as well. The Googles, the Microsofts, the Walmarts of the world as well.
Right. It's actually, and again, this is going to be really offensive to some folks, but it's actually, I've had an easier time having this conversation with multinational company folks than I have with multinational nonprofits. And I don't know, we could spend a long time analyzing why that is, but I remember one instance where, and I'll try to gussy this up enough, but where a company with the logistics expertise approached a large organization with the offer of, this is what we do. We help move stuff, right? And you guys are trying to move stuff from, this place to that place. Can we work with you to do that? And the lead person, who's, there's a big organization, big individual, basically looked at him and said, all I want is a contribution, and just write me a check out of your corporate philanthropy, and we know how to do this, right? And I heard that story, and I'm kind of like, wow, so, you must think you're pretty damn good, that, that you can tell, this logistics organization that basically has made billions of dollars, figuring out how to add value, how to move stuff into emerging markets and places that need whatever it is that one person wants to get to another. And I think that part of the challenge and the conversation with the traditional kind of nonprofit folks is that they've just been so locked into their game that it's hard for them to see opportunity outside of the channeled and categorical funding streams that they've been kind of bred to play to. And it's whereas in a business entrepreneurial context, the whole game is opportunity, and how do you do more with whatever limited resources you may have. And so there's just a different mindset. And so I think that part of what's going to happen is I think that the traditional groups, the incentive piece is when you see the governmental and the foundation and other kind of funding structures begin to put new terms on that capital and begin to say, if you want to access this capital, we need to see X, Y, Z. And it's not simply, gosh, did you have boots on the ground in Haiti? It's, well, actually, how effective was the organization in the execution of its strategy in Haiti, measured by these 10 indices that are effective for this domain, not just kind of broad, kind of, gosh, did you show up indices. And I think this is part of the power of the conversation, is that I also know that within these traditional transnational aid organizations are people who are trapped. And they are as trapped as any of us in this process. And they're dying for ways to kind of step out of the mold and try to break it. And some of it is, quite frankly, just going to be generational, and some of it will be retreads like me who hit a certain point in their career and kind of just say, everybody's intentions are all good, and I'm glad that we're all here for the kids, but it's just not good enough, right? I mean, we've got to raise the bar. And I think when people come around the idea that way, they can be much more open to the opportunities and the innovations that could be brought forward.
Yeah, I mean, just pick up on the point of generational shift. The bifurcated world in nonprofits is more entrenched among an older generation. And I mean, I'm too young to talk about generational shift and the youth and all that, but there's no doubt that younger people coming into those organizations are more inclined to reject the easy stereotypes of the bifurcated world, which said, if you're in a nonprofit, those other guys in the for-profit world are evil and out to exploit poor people. I think that instinct is more entrenched among an old generation. It's starting to break down among a younger generation that's just being brought up in a more integrated way. At the same time, I think that instinct is often right. And there's been a lot of hype around the multinational corporations' power to change the world and end poverty. And so I think part of what it's going to take to enable impact investing to be actually useful and for the force of those transnational companies to be, put to work good will be humility on behalf of the transnational companies and those who want to engage them about what it is they can do. And let's not oversell the bottom of the pyramid opportunity for large multinational companies, most of whom are not going to make money selling to the bottom of the pyramid. They're going to make money selling to maybe the lower end of the middle class, but a lot of the problems that the great nonprofits work on need to be solved by nonprofits, and they need to be capitalized by charity, and governments need to subsidize them. And so a huge part of our story is impact investing is not about replacing a lot of that work. And we are not saying that in every case a multinational company should be inserted into the process of helping to deliver services to poor people. In many cases, poor people suffer under market failures and they also suffer under government failures, but somehow assuming that we can just solve their problems to the markets. The markets has solved the easy things. The hard stuff, in many cases, is not going to be solved by the markets. So I think it's going to take both a breakdown of the stigma from the nonprofit side about the intentions of business. It's also going to take a lot more humility on the side of business people, and frankly, less exploitative and greedy behavior. Because sometimes it's not just stigma; sometimes they really are that way. And last thing is on the generational point, and something we mentioned in the book. One thing that will help those transnationals engage is when they suddenly realize how much interest there is in this, which they don't know. And there's just a classic system change. When you have a system in place, the people running the systems are going to be lagging indicators of change. And change is going to come through from the rank and file. It's going to come through from younger people moving into those companies. But the 60-year-olds who run national companies are not going to be picking up on this new ideas as quickly as the 25-year-olds entering them. There's always going to be a lag. So the example from the book is of JP Morgan, one of the most important transnational companies. If you had asked Jamie Dimon, the CEO, in September 2007, how many of your investment bankers care about impact investing, he would have said, well, none. I mean, we're here to make money and it's inspiring and people do really well. Well, in October 2007, a two-person unit in the investment bank was launched. It was called the Social Finance Unit. Within 1 week of that unit being launched, they had logged 1,000 investment bankers who had either phoned them or emailed them after an internal announcement went out saying, we want to work with you. And work with you meant basically you want to be impact investors. They didn't use that language then, they do now. But the basic idea was this unit said, hey, we're going to be a unit in the investment bank, not in the foundation, that's going to use investment banking skills to address issues of poverty. And 1,000 people in the investment bank called up and wrote in and said, we want to work with you. So the point of the story is if you ask Jamie Dimon in September, what is your sense? He didn't know, because not only is there going to be a lagging indicator in terms of the changes that happen, there's also it's going to take time for people to figure out what's going on. This momentum is existing before people realize it. And it takes moments like that for people to wake up to it. And I think that's going to start happening in more and more companies where this is going to become a motivation for recruiting, it's going to be a motivation for retention. And once that happens, then it's going to start getting into the more serious attention of senior management.
Please.
I think you might want to wait for the mic.
Bryna Lipper with HUD. I'm curious to know, are there any international models or examples that you can cite of capital-driven societies that have these sort of policy structures that you've examined are good for us to look at?
Do you want to?
It's funny, whenever I meet with people in various governments and they all say, oh, I feel like we're behind you guys. And I always want to catch up. And it's, in Canada, they're worried about the British. In England, they're worried about the Americans. And what I say to people, look, if this is a 100-yard dash, sure, you might be behind, but no one's more than 3 feet out the block. I would have said that a year ago. I think now there's a few countries in the last 6 months have gotten 10 yards down the line. I think some of the most interesting has been in the UK over the last 2 years, where there was momentum there was momentum in the old Labour government under Gordon Brown. And interestingly enough, the new Conservative coalition has actually embraced these ideas with more gusto than we anticipated. In that case, it's a classic case. And we talk about this in the book. Where is impact investing fertile? It's exactly in those areas where there's opportunities to address social problems with investment that are created when neither the market nor the government is effectively addressing the problem. In the case of the UK, they have more aggressively than other Western nations confronted. You can either say it's reality or it's politics, but they have said that we cannot provide the social safety net through the state that we used to, and so they've pulled back under the new government. And into that place, they have aggressively promoted impact investing. So a few things. They've got some interesting corporate. You can now start a company that's called a community interest corporation. So it's a for-profit company with social purpose. Most interestingly, a few months ago, they've worked with the banks in the City of London to capitalize a £600 million, I believe it's pounds, impact investing bank, whose job is going to be to place that money with other impact investing funds. They're really focused on capitalizing social enterprise that can fill in the gap that's being left behind as state-run and state-funded services retreat. So I think the UK is an interesting example. The South Africans, and I'm South African, and full disclosure, I worked there in the late 90s for the government, but I think that government, for very obvious historical reasons, has been more intentional in how it's thought about managing the allocation and the disbursements of capital than other countries. And so what's come out of a messy process of the Black economic empowerment agenda and others is at least a very high-level confrontation by the government around the ideas of that investment capital should be treated as more than simply serving the purpose of making more money. So I think there are examples. You're from HUD. I think the U.S. is the leader on low-income housing development and mobilizing impact investing capital alongside private capital. The current head of HUD, cut his teeth in New York, where he was involved in a very interesting fund that the Rockefeller Foundation and other foundations invested in that puts city money alongside foundation money and brought in senior bank money to provide lending capacity to low-income housing developers. So I think on housing, we're probably in the front. The Australians are starting to make moves, and then some of you might have heard of social impact bonds or pay for success, something that President Obama allocated $100 million in his budget proposal earlier this year. That's something that the UK is leading on, but there's going to be some pretty quick momentum in Australia and elsewhere.
But I think as we think about, like, how do you look for examples, where are the cases of success, I think it's important for folks not to get too tripped up on the labeling that we put to these various things, because I actually think that there's a lot of activities out there that are both and opportunities, where organizations and investors on a variety of different kind of tranches and perspectives have come together to make deals happen that would not have occurred otherwise. And they may not, as you were saying earlier, they may not think of themselves as impact investors, they may not, use that kind of language, but they're leveraging tools and opportunities across the middle as opposed to within either silo. And I think that's what we should look for when we look for opportunities, because that's the key part, to just kind of like opening up and going, wow, there's just a host of ways that we could actually be moving and structuring capital differently. There's a variety of ways that we could think about the role of organizations. When I give talks in Europe, where I spend a fair amount of time, the pushback that I often get from folks is when they stand up and they say, well, what you're describing is the traditional privately held family company in Germany, or they just view it as, well, this is how we're supposed to do business. And part of what's distorted the practices has been the role of public markets, public capital markets, that don't know how to bring into account off-balance sheet liabilities and opportunities, and don't know really how to value social capital or these other elements where, in a family company that's been managed for 75 years in a region, the decisions just intuitively are not simply made on the basis of finance alone. And a lot of these ideas really have been out there in various forms. And this is part of what's, quite frankly, just so much fun about being in the middle of these conversations with folks, is being able to really connect the dots in a different way that traditionally people just haven't quite had their head in that orientation around.
And so we'll take one more question. Yeah.
Steve Dubba with the Democracy Collaborative. I guess I want to follow up on that comment, because I was sort of thinking about that. We've seen financialization of the U.S. economy and British economy, certainly, and maybe the global economy, depending on how you want to count it. And something, some of the impact investing that would have been natural in the old system, like you were talking about the German private companies, has fallen by the wayside. So I was just curious as to, any thoughts you have on the drivers of that, I will call it an opposite tendency, and what we can learn maybe from that historical experience in trying to rebuild this system.
Well, I mean, doing kind of meta-economic analysis is above my pay grade, but I would say that what's been interesting to watch relative to the conversation, at least that I'm having with folks who are doing impact investing, is this kind of growing realization that maybe the model and the reference point is not private equity and venture capital. Maybe, the idea of creating a fund where you go in, there's a 7-year period, holding period, there's maybe 2-3-year extensions, and then you're out, forces liquidity of companies that actually need 20 to 30 years to really grow, to be able to meet fulfill their potential, meet their real opportunities that they see. And more I'm hearing people talk about either structuring evergreen funds or long-term holding company structures or limited partnerships where there's not the forced liquidity or strategic acquisition. And the more I hear those conversations, the more it just seems to resonate around what this is. Now again, it's not like any one of these is the answer. I think it's all contextual, and I think there's a role and a place for a whole host of different structures and strategies and financing instruments and vehicles. That said, I think that in the aftermath of 2008, what we need to be advancing is an alternative vision for what capitalism can be about, that's focused on long-term value, that's focused on a more inclusive kind of shareholder-stakeholder model that looks for opportunities to basically leverage as much value as possible, as opposed to ignore off-balance sheet issues. And again, part of this that's just striking to me is that if you went, there was a period maybe 10 years ago when I was going to Davos, to the World Economic Forum. I guess I went maybe 3 or 4 times. And I was floored in those conversations at that point in time at the number of CEOs who were talking about the risk to their workforce represented by pandemics, the issues around their business model of the challenge of water, the whole issue, of course, of global climate change and other factors. But there's a lot of folks in, quote, traditional business who not all of a sudden, but progressively now are being held to account for things that 20, 30, 40 years ago, they never really had to pay attention to. And so it's forcing a really different kind of conversation and receptivity on the part of a lot of these corporate folks at the same time that you're seeing this upswell in the NGO community of people who are saying, not to think about the economics of poverty and how we can leverage capital more effectively to pursue the social and environmental goals that we're concerned with, leaves kind of half the deal on the table, right? And there's more and more folks who are very comfortable talking about structured finance opportunities within impact or for impact. Whereas, again, I mean, one of the reasons that I used to like to get $100,000 grants is I could divide it easily among 4 staff positions, right? It's like, and now you're getting folks who are coming to the table who know how to do finance and who want to use finance in this different way. And when these parts are coming together, it's explosive. And I think the potential to direct that energy for impact is so phenomenal. You can just taste it, right? And the challenge is, can we at the same time address these various issues that we've been talking about in order to really unleash that potential and not have it get snuffed out by the vested interests of the bifurcated organizations and powers and the power elite that basically don't want to see any of this advance, right? And that's on kind of both sides of the fence. They don't want to see it advance. And that's really why we're at this inflection point. I mean, I think impact investing as a term, an emerging set of practices and common kind of focus is going to be around for a long time. I'm not sure impact investing will be able to really leverage and capture its full value potential in the face of the opposition that's sure to come.
And the last thing I'd say, I mean, I'll take the more radical interpretation of your challenge, which is, you talk about the financialization of the world. I mean, you're all being very polite. If we were having this conversation at Occupy Wall Street, those guys would be throwing things at us and saying, how dare you in your suits get up here and talk about how finance is going to save us when finance has got us in the problem. I mean, I think that's the more radical critique. And the answer there, and it's linked to what Jed said, which is, if this is done badly, it's dangerous. And if impact investing means rich people get to feel good about what they're doing while actually not putting their money into deals that really are driving long-term sustainable social justice in communities, but rather just feel good, if we don't have the measurement standards that force that floor to rise, if we don't have the systems of law that ensure that if you do get a tax break for this, you better be earning your social, the social value of that tax break. So there's a huge danger, and in the UK case, a lot of people are very suspicious of David Cameron getting up there and embracing impact investing because they're saying, well, we used to believe that a just society was one in which government delivered a set of services. You're now telling us you're going to pull back from that, and those services will be delivered by profit-making people. And so, again, I think the danger here is that there's a danger that this becomes too easy, that the momentum allows people to feel good about what they do and actually validates a set of what could be quite pathological tendencies in our world, and that is to allow the financialization of our societies. And so in the end, we are not here saying impact investing is the answer, and we're not here saying that it should crowd out everything else. It will play a part in answering that question of how are we going to deliver the just and decent society we want to have. And it is a crucial part because the old ways of doing things alone won't work. But alone, impact investing won't work either. And I think once you recognize that this isn't just about raising your investment fund, and it's not just about investing your money, it is fundamentally about building a new set of systems, then everyone in this room has a role to play. If you're a student, you should be challenging your professors. If you have any money to invest, you should be putting it with the Calvert Community Notes. Lisa Hall just showed up in time to get a shout out. The CEO of Calvert, which allows you to do this with a very low minimum. We all have a role to play once we recognize that this is about building the systems. And part of the role we have to play is to hold impact investors accountable and to hold us accountable to not just being, smug finance people who think we can solve everything, because we all know where that's gotten us in the past.
That's great. Does anybody have a closing, burning? Here we go, right there.
One more quick question.
Why don't you wait for the mic? Thanks.
So my name is Patrick Davis. I'm here from Calvert Foundation. You kind of hit on this, but just a personal question. How many people in this room, by your own personal definition, own an asset that you would claim is an impact investment? It's just, I think it's an interesting framing, and it's a challenge, and you issued that challenge. I think everybody has something that they can do in their role still beyond the work that we're all doing on a daily basis.
It's a challenge, and I think one of the opportunities will be the democratization of impact investing and creating more and better vehicles that are accessible to folks at all kinds of different price points and wealth levels. That said, you can do this. I mean, for me personally, I'm fully invested in impact and sustainable finance vehicles. I've got nothing in a traditional kind of vehicle. And between credit unions, community banking institutions, Calvert notes, DAFs, I mean, there's so many different things. And, you can really do this today. And this is, again, part of the power of this whole conversation, is that 20, 30 years ago, you actually couldn't. I mean, even if you wanted to, you just couldn't. And we actually know more about how to structure these. We know how to look at these vehicles. We've got more intermediation going on to bring vehicles forward and on terms and bases that multiple actors can invest in. It simply is inertia, and it's a lack of a vision around this new whole that's emerging here that really is the block. And that's why I think we wrote the book and why we hope you'll enjoy it.
And if you buy the book, $1.30 more will be in Jed's impact investing portfolio.
So with that, we will wrap up the formal portion of the talk. There are still some books left for sale, so if you want to buy a book, you can still do that. Politics and Prose is still in the lobby. We have a few minutes that Jed and Anthony can sign some books, but of course the reception will be ongoing. So thank you all. Thank you, Jed and Anthony.
Thank you very much. Doctor?